In September 2023, I added Alphabet to the Asymmetric portfolio. These are stocks that I think can 10x in value over the next 10 years. Alphabet was really an unloved company at that point. The price earnings multiple was below 20, and yet there was a lot of value in a business where search was continuing to grow, YouTube is growing, and the Google Cloud business is growing in excess of 30% year over year. On top of that, you have Waymo. Waymo is a phenomenal business in autonomous driving. So lots of value, lots of optionality for Alphabet. And the market is starting to realize that this is potentially the biggest winner in AI. The company passed $3 trillion in value. And I think over the next few years, we're going to see Alphabet be the first $10 trillion company in the world. How are we going to get there, and what do investors need to know today? That's what I'm going to dig into. My name is Travis Hoyam. Thanks for watching Asymmetric Investing. And if you want my deep dives in stocks like Alphabet, check out Asymmetric Investing. My newsletter is a link on the screen and a link in the show notes. That's where you get more coverage from me, including my asymmetric portfolio is there. That portfolio has absolutely crushed the market since it began. So love to have you as part of that community. And I also want to tell you about Fiscal AI. Fiscal AI is a tool that I use here on Asymmetric Investing, and you're going to see it in almost every article I write because it's a phenomenal research tool. It's got all your fundamentals and including key performance indicators. I'm going to show that throughout, but it's going to give you all of the information that's on earnings reports, press releases, transcripts, everything all in one place. Incredibly valuable tool. So if you want to check that out, fiscal.ai/ASYM, that'll give you 2 weeks for free and then 15% off if you decide to become a paid user like I am. But let's dig into Alphabet because I think this continues to be an undervalued business. Like I said, covered this in 2023, and a lot of the things that we're seeing play out, even just over the past few weeks, are things that I talked about then. But you can see here on the right, the momentum for the stock has just gone absolutely crazy since April. Shares are up about 50%. That's a huge move for a company the size of Alphabet. The valuation is getting a little bit more expensive. I'll come back to this in just a second, but now a 26 price to earnings multiple. I think every time I bought the stock, the price to earnings multiple has been under 20. So a real value stock, but let's not forget about the growth opportunity for Alphabet. And I think it's worth starting here just how much this is a compounder long-term. 2005, the company had $6 billion worth of revenue. Over the past 12 months, $371 billion in revenue. Just a phenomenal business, potentially one of the best businesses that has ever been created. But I want to go through the segments that Alphabet reports in their business. So these are the main segments that are in search and other operating income. I'm going to show that in just a second. So they don't break the profitability out of each of these businesses individually. They lump the profitability or operating income and they lump all these together. I wish they would break them out and show us just how profitable, for example, YouTube is, but they haven't done that yet. So you can see since September 2020, the search business alone has more than doubled in size. So the narrative in the market is that artificial intelligence, ChatGPT is going to destroy the search business. That is absolutely not what we're seeing in the business right now. In fact, if we just go back to the ChatGPT moment that was in the fourth quarter of 2022, you can see that the search business is actually accelerating its revenue growth over that period of time. So only a compound annual growth rate of about 9% since the middle of 2022, but that's actually picking up, is now in double digits. So I think the search business not really going anywhere. That's also getting more AI overviews. You have AI mode. I think everything that we've heard from management in their conference calls is that this is going to continue to be a growth business. They're continuing to monetize much better than anybody else in artificial intelligence. Remember, Alphabet is making money on these searches, whereas ChatGPT is losing money on everything that they do. So much better business model. And now we'll talk a little bit later about their artificial intelligence models, but I think you could argue that Alphabet is actually better in AI models than ChatGPT is today or OpenAI is today. The other businesses to keep an eye on, YouTube continues to be an absolute juggernaut. Again, only a compound annual growth rate of 9% over the past 3 years or so, but this is now the biggest streaming company in the world. YouTube generates more revenue than Netflix, and Netflix is a $510 billion business. This orange column is only YouTube ad revenue, but when you add in their premium revenue as well, that goes over $50 billion per year. And Nielsen's ratings just continually show that they are gaining market share, something that Netflix is not doing. Disney is not doing that. YouTube is where the growth really is in the streaming business. The other two segments to look at, network revenue is actually in decline. That's going to be the ads that you used to see all over the internet. They're still there. They're still supporting a lot of different publishers, but not a growth business anymore, especially as you pull more and more of those answers into artificial intelligence and into search. and not going out to other websites. So I think that trend will definitely continue in the network business. The other one is subscriptions, platforms, and devices. This is going to be at least some of the artificial intelligence revenue that you're going to get with Alphabet. So this is going to be Pixel phone. It's going to be the Google Play Store, everything on Android. And again, this is actually the biggest growth market of the four that I have shown here, 17.1% over the past 3 years. So you add those three together, and then let's add in the profitability. This is the Google Services operating income. So you're going to see that in red. That has improved. So the operating margins have improved as well, about 15% compound annual growth rate on that operating income. That alone is really just the foundation for Alphabet. And if this was the only business that there was, I wouldn't think this would be a $10 trillion business. But this is the foundation. This is going to pay the bills for everything else that comes in the future. And that's where you get to the exciting growth story. Google Cloud is really where the growth is for Alphabet right now. Compound annual growth rate is 28.8%. That growth rate in the most recent quarter was actually over 30%. And those operating margins are improving as well. So now $9 billion in operating income over the past 12 months. What exactly is this business worth today? Would you put a 10 price to sales multiple on this business? That's almost a $500 billion business. You could look at other AI businesses that are trading for 20, 30, 100 times sales. So this business alone could be easily worth over $1 trillion. And I think this compound growth is going to continue for Google Cloud because Google has the best infrastructure. Arguably, they have the best models. They've got their own TPUs. So they have NVIDIA GPUs. They have Google created TPUs. And businesses are now building on top of Google Cloud. Just like businesses were built on top of AWS a decade or two ago, now artificial intelligence businesses are looking for the best models. They're looking for the best place to host their infrastructure. That is going to be Google Cloud. That is why this is a phenomenal growth business. It used to be kind of an afterthought in the hyperscaler business, but now this has become a huge growth driver. I think this is going to continue because of all the momentum that you have with artificial intelligence with Google. If we're just looking at the chatbot models, the text models with OpenAI and Alphabet and Google, you could say that they're maybe equal. Maybe OpenAI is a little bit better here. Maybe Google's a little bit better there. But when you start to look at image models and video models, that's where Google's infrastructure and assets, even the assets like YouTube, are really starting to show. They clearly have the best image and video models. I think if you look at historically, words are really the first place that technology starts, but then the real disruption starts to happen when you start to move to images and video. That's what we're seeing with Gemini's models. And those improvements, I think, are going to be the big differentiator over the next decade or so. So I expect this to continue to grow. And if it grows at 30, even 30+% over the next decade, this is going to be an absolutely massive business. On top of all that, let's not forget that Alphabet owns most of Waymo. They have basically self-funded Waymo. Waymo is now the most advanced and biggest autonomous driving business in the world. Estimates are this is worth a couple $100 billion today. But look, you have companies like Tesla that are worth over $1 trillion based on their potential future in autonomy. Tesla does not have any L3, L4, or L5 autonomous vehicles. Waymo has driven millions and millions of miles. And they have commercial operations in Los Angeles, Phoenix, San Francisco, Atlanta, and Austin, with Miami coming soon. They're testing in about a dozen cities. I think the real story here is that this is the company that has proven out safety in autonomous vehicles. They have built that network. They could either choose to grow on the Waymo app, or they could grow with third parties like Uber or Lyft. They have a lot of optionality in that business model. And the real differentiator for them is going to come in the future as they start to lower the cost of vehicles. The criticism of Waymo has always been that, you know what, these vehicles are too expensive. They're $250,000. I think the latest estimates are more like $100,000 to $150,000. But once you start creating these vehicles at scale, you're going to lower the cost. You're going to lower the cost of each LiDAR. You're going to lower the cost of each radar. The compute cost per vehicle is going to start to come down. And they have proven out the safety. That is really, I think, the hardest nut to crack for these autonomous vehicle companies. I think Waymo is going to be a phenomenal business in the future. Whether it is spun out or not, this is potentially a $500, maybe $1 trillion business just hiding in Alphabet. So when you look at the compound growth of Alphabet's business over the last decade, I think this is something that's going to continue in the next decade because of their leadership in artificial intelligence, infrastructure, in models. And let's add in YouTube and Waymo on top of that, just phenomenal businesses that I don't think get talked about enough. And while evaluation is up a little bit, it is not all that crazy. Price to sales multiple is just 8 for Alphabet stock. Price to earnings multiple is about 27 as I'm recording right now. Other high growth companies are going to be trading 30, 40, 50 times earnings. I think if we start to see this growth continue to compound with Alphabet, we start to see that some of these artificial intelligence startups are not the threat, the disruptive threat that investors thought they were even just a few months ago. These multiples could continue to rise. This is a $3 trillion company now. When you combine the growth potential, the potential for margin expansion, and the potential for some multiple expansion with Alphabet, I think this will be a $10 trillion company by 2030. So let me know if you think that prediction is correct. Where do you think Alphabet is going to be in 2030? Leave those comments in the comment section below. And if you want more from me, don't forget to check out my Asymmetric Investing newsletter. Like I said, link on the screen and a link in the show notes. And if you like what you saw from Fiscal AI, check them out. This is the best finance tool that I have ever used, and they continue to add features on a regular basis. So fiscal.ai/ASYM. Thanks for watching, everybody. We'll see you here next time.